We are our own potters, for our habits make us and we make our habits. Frederick Langbridge. Your habit, if you want to learn how to trade in the market, is 10 to 15 minutes each and every day going over the charts. That's why we try to go over these charts 10 to 15 minutes every day, following the patterns, filling out your trade worksheet. Whether it is the daily market worksheet, the trade worksheet, if you're in the middle of a trade, the weekly market worksheet that you fill out after the market closes on Friday, you fill out those worksheets and use them. They will supercharge your training. We also have a great book. Again, start off just listening, following the videos. Subscribe at chartingwealth.com for free. We have a great training video coming out to you today. It is entitled Liquidity, a Key to Your Success. You need to understand what liquidity is, the difference between the bid and the ask. The closer they are, the more liquid, the more like cash your position is that allows you to get out without sustaining huge losses. Just own the difference between what you bought it for and what you can sell it for. If you have a big difference between the bid and the ask, you don't have a lot of liquidity. You can see that a lot in options. You'll see it also in stocks and ETFs. You need to understand that. Another just basic but valuable lesson. Take that training. If you're not a subscriber, sign up for free. Let's jump into these charts. We see stocks and bonds up, Bitcoin up, not much, 0.25%, particularly after these big down days. And we see gold is down 0.37%. I really want to see gold rebounding. But you know what? I don't control what happens. I just follow the charts. Let's look at the weekly chart first on the S&P, even though it was an up day, almost 1%, 0.98%, almost a full 1%. What do we see for the week? A big red down candle, price percent oscillator heading down, derivative oscillator heading down. First day of the latest 2-day is a solid green candle. What does that mean? Well, it has a wick on the bottom so we can see where it touched the low for the day. Solid green on Heiken Ashi candlesticks means what? Means a slowdown in the down movement. We can see the price percent oscillators not going down at the same angle it had been. It paired that down move off a little bit. Derivative oscillator, our leading indicator, triple smooth version of the relative strength index, still gaining downward momentum. Look at the half day. You can see where things bottomed back in the afternoon on Monday, sliding sideways, down a little bit at the end of the day on Tuesday, then popping up Wednesday morning and afternoon, pushing through that prior half-day trend line. So keep close eye on the 2-day, which is weakening a little bit in that down move, and the weekly, which is still strong down. So the overall trend still pushing down. What do we see on the Qs? We see the Nasdaq 100 down candle for the week. Price percent oscillator heading down, pulling away from the red signal line. Derivative oscillator negative. What about the 2-day? We can see where, again, it pushed down strong on that last 2-day candle. First day of the latest, very similar to the S&P. Won't repeat myself. Price percent oscillator looks very similar to the S&P. Derivative oscillator still gaining downward momentum. And of course, we can see about the same thing on the Nasdaq 100, sliding sideways down a little bit yesterday, popping up throughout the course of the day on, what was this, Wednesday, going into Thursday. Let's look at 20-year bonds, up for the day 0.60%, moving into a second week of up movement. Nice to see. Derivative oscillator gaining a little upward momentum. Price percent oscillator had been flat for a couple of 3 weeks, heading up. Now, what's happening? Hey, do you see it? We're getting close because this candle's not closed yet. This first day of the latest 2-day candle. Are you going to put in your show notes? Are you going to look tomorrow afternoon around 3:45, 3:50 to see if you have a 2-day recross for a potential jumping in to ride or up? Well, if you guys remember back when we had, I think it was this 2-day recross back in March. I think it was this one that we rode and rode and rode like a really strong stallion. It just carried us. Will it happen again? Don't know. But the last one was really good to us. Explore all the charts all the time before you make any potential practice trading decision. Remember, we're not a stock calling service. We're an education firm. We talk about practice trades. Might be something you could consider. Look at the half day. popped up strong on Monday, sideways on Tuesday, popping up on Wednesday. Let's see what happens on Thursday. And if you have a 2-day recross, that is again where the 2 days moving in the opposite direction like it has been. And then at the close, right toward the close of the candle, it is closing going up. Might give you an opportunity for a successful practice trade. We'll see. Practice trade it if you so desire. Remember to fill out your trade worksheet. I'm going to put at the end of today's training how to use that trade worksheet. Very important. Gold down for the day, 0.37%. Again, going into the third week of down movement in gold, it hasn't plumbed the depths of last week where the low was 163.23. So far this week, 164.07. But still red down candle there, price percent oscillator pairing off, not heading down at the strong angle it had been, a little less. Still going down though. Derivative oscillator gaining downward momentum. 2-day chart. Again, we can see where things dropped and bottomed out most recently on Friday the 17th of September. And again, a slowdown in the down movement on the Monday-Tuesday 2-day candle. And the Wednesday green open box spinning top. Hope springs eternal, but that price percent oscillator and derivative oscillator still moving down. Look at the half day. We did have a crossover going up most recently. That really happened throughout the course, well, at the end of the day on Tuesday, but up since actually Monday. And this, of course, is Tuesday up, Monday and Tuesday down a wee bit, 0.62% on Wednesday. So keep an eye on gold. Again, disappointing me, but that's okay. We'll wait until it surges, and when it does, we'll be ready for it. What do we see on Bitcoin? Up for the day, not much. 0.25%. Still, the overall mood in Bitcoin is down. The price percent oscillator is still positive, but heading down. Derivative oscillators heading down. And again, as we move to the 2-day, that is where we saw that 2-day crossover going down, then slid sideways and up a little bit, and then, of course, started moving down strongly with that latest 2-day candle. And then, of course, so far we see on Wednesday up a little bit, but again, our Heiken Ashi candlestick is showing us at the average pace down along with the price percent oscillator and the derivative oscillator. Half day, again, you can see where things are going down. So Bitcoin has a lot of downward pressure still on it. That is where we are, folks, as we end the day. Thank you so much for being with us. You're not a Patreon supporter, then you will not get the 20 weekly vertical crossovers that we will be sending out on Thursday to give you something to study, look at, consider, and try to find some good practice trades for Friday on those weekly vertical crossovers. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.